Welcome to this channel. As usual, this is EcoVest Consultants Limited. Today I want us to address something that is very important in accounting. There are these small organizations or even bigger organizations that do not probably understand how to deal with those expenses that do not have the supporting documents. I will give an example. You leave your office to probably go and attend a meeting in town, and then you use a public service vehicle, and then they don't give you a receipt. That is one of the expenses that you might not be able to support. Another one that you may not be able to support, probably you are pursuing a certain issue in a certain public office, and then you're being asked for a certain facilitation, which all of us get to know. And maybe you're bribing the officers that are there, or probably you are giving them an appreciation of the kind of work they're helping you. Whichever the kind of way that you want to call it, those are expenses that you cannot be able to support. Another expense that you might not be able to support, basically, maybe you go to the market, and maybe to these small green grocers and then the Kibandaski owners. Then you buy or purchase certain items there. You will not expect maybe to get a receipt. Or maybe you want to use a motorbike for transport from one place to another. You might not be able to get a receipt. So as a good accountant, how will you be able to support this kind of expenses, so that in case of audit you can be able to, or you can show the expenses that having taken place? Number one, all these small expenses you can be able to draw them from the petty cash. You can transfer money from your bank account and then put it into petty cash. And then from the petty cash, now you can be able to make requisitions with regards to the kind of expenses that are expected. An example, you want to go to town, you write a requisition that you want to go to town for a particular duty, and that you're expecting to spend this particular amount of money. For example, you're moving from Kitengela to town, you expect to spend 200 shillings to and fro. That is the expectation in terms of expenditure is 400 shillings. So you will requisition from your accountant 400 shillings, and then in that requisition, you go to pick the money from the accountant. The accountant should be able to write what we call a petty cash voucher. Now the petty cash voucher is attached to the requisition, and then you are given the money. Once you have come back, then when the accountability is being made for the petty cash, then you must be able to highlight that a part of the expenses of 400 shillings was given to Mr. Dunga for the transport going to town to sort out a particular problem. Now, when this petty cash accountability is being now transferred to the main ledger, then you can be able to, subdivide the smaller accounts in terms of the transportations, in terms of the kind of expenses that, or the line of expenses they might have actually affected. So you should be able to show clearly that you followed the accounting procedures in the expenses that you are incurring in an organization. Another thing, there is this particular norm that most accountants, especially small organizations, do incur, or these mistakes that they normally make. You realize that you are having a particular, you're having maybe 2 or 3 employees that are earning below the threshold of 24,000. We all know that from 24,000 and above, you're supposed to be paying for pay as you earn. But because you've got employees that are earning less, so you see no need of returning. I want to advise you that it might be very difficult for you to claim an expense in line of the salaries and wages, yet you incurred it, but you cannot be able to claim it. Reason being, you did not return so that the ITAX could calculate the expectations of your obligations to be nil. So it doesn't mean that when you have employees that are earning below 24,000, you should not be able to return. This is how you're supposed to return, so that the system can detect and realize that you are not eligible to make payments. However, they record such kind of expenses within your books. So when you do an audit accounts, or when you're doing the monthly or the yearly returns, and you indicate in the expenses that you're having salaries and wages expenses, then it is something that can be proved. But if you don't, then definitely KRA are going to write to you asking asking you how you came up with these expenses, yet you did not indicate, or you are not even registered pay as you earn person. The fact that you are registered as pay as you earn doesn't mean that you must be paying the payee, but it means you should be making returns every month, even if you are having the employees that are earning less than 24,000. So make sure that you do the right thing to avoid future queries and future problems with the KRA, and also in terms of your compliances. Keep in touch with this channel as we bring you more of the information with regards to your finance consulting. Thank you so much. Reach us anytime.